So how are you? Welcome, welcome.
I'm doing fine, thank you. How are you doing? Thank you so much for
Yes.
having me.
Oh no, I am the one. We are the ones who thank you so much for being here at the Global Fashion Conference. And first of all, I would like to introduce you to all the participants who are seeing us. So Christiaan Lensvelt, I hope I pronounced it correctly.
Yes, you do.
Thank you. Is an investment advisor for the Good Fashion Fund. And this is an initiative to create systemic change in the textile and apparel industry by financing the implementation of highly impactful and disruptive production technologies in Asia. The Good Fashion Fund provides long-term loans to textile manufacturers in India, Bangladesh, and Vietnam to adopt sustainable technologies with the aim to reduce the overall consumption of water, energy, or materials in the production process. The fund is managed by Fount, which provides investment and fund management expertise and cooperates with Fashion for Good as sub-advisor, which provides a rival industry network and technology knowledge. And this initiative was made possible by the Laudes Foundation and the Mills Fabrica as anchor investors. In his role as investment advisor, Christiaan covers all the steps along the investment process, touching on all relevant facets of impact investing, from financial analysis to E&C assessment to impact setting and monitoring. And prior to this, Christiaan was active as a strategy consultant and as an analyst at a private equity investment fund. He holds a master's degree in quantitative finance from the Erasmus University of Rotterdam. So, Christiaan, we are going now to start our conversation. I think that everyone is very interested in terms of the investment or the funding for sustainability. As you know, you are really, a pioneer in terms of this kind of sustainability funding. And I would like to ask you first, which are, the focus in terms of the investment products that your fashion fund supports.
Yeah, so if you look at the textile value chain, you see that one of the most capital intensive stages of the textile value chain is in the processing stage. So that's, for example, dyeing equipment, washing equipment. And this is also the type of equipment that we tend to focus on because it requires a big investment upfront, which we can support with our loans, and which are often or can be very impactful because at this stage there's a lot of water consumption, energy consumption, and a lot of use of chemicals as well. So that is what we most typically focus on.
Okay. And how is the process of selection? Because you have a specific target in terms of Asian countries, and I would like to know, why Asia? Because as you know, there are other parts of the world, even here in some countries in Europe, where sustainability is not so well, so advanced. And so I would like, why do you have picking up Asian countries?
So before this fund was started, there was an elaborate market research done, and a couple of the findings I think came together, which is that the countries that we focus on, India, Bangladesh, and Vietnam, are of course all three of them, well, very big exporters of textiles and garments.
Mm-hmm.
And additionally, what we also see in some of those countries, that the access to finance can really be an issue still. Because of course, as a fund, well, we provide knowledge, but we also provide the financing specifically. So that access to finance part was also a key for us to focus on those countries specifically.
Okay. And how is the process of selection? Because even within these countries, you have many manufacturers, and how do you do that? What is your main criteria in terms of the selection process of the projects to be funded?
Yeah, so our investment process usually is there's several stages across the investment process that we have to cross. I think as an impact investment fund, there are two key focuses. One is of course the financially it should make sense both for the manufacturer and also for us. But maybe even more important is of course the impact that we look to achieve with our financing. So I think if you look at it from a very high level, what we do as an investment fund at the Good Fashion Fund is that we do a financial assessment.
Mm-hmm.
And secondly, we do a in-depth assessment of the technology that we are to finance.
Mm-hmm.
And with the impact that we specifically seek, for us, investments are only eligible if the equipment that we finance is expected to result in an improvement or in a reduction of consumption of either energy, water, or chemicals in the stage of the production process where the equipment is supposed to go. It's often focused on reduction of consumption across these, but it can also be, for example, an improvement in more recycled wastewater or recycling of pre-consumer waste. That's also something that we typically like to look at. But the 50% is one of the benchmarks basically for us to establish whether an investment can be eligible or not.
Okay. And in terms of these impact measures, I think it is very interesting to think that they seem quite easy, to measure, but at the same time, they are expectations. So they are estimative of what you are going to find. So how do you do that in terms of monitoring the process, and does this have some kind of impact in terms of the relationship with the manufacturer?
Yeah. No, I think you're exactly right. I think for us at the Good Fashion Fund, I think we are lucky that our impact is relatively easy to measure. That's of course not always the case with impact, but in our case, yes, it is. And indeed, so upfront, when we do the investment, it consists out of, I think we do two things specifically with regards to the equipment that we manufacture. We set a baseline, which is basically the consumption that is being used before implementing the new equipment. We do a thorough estimation of the consumption that we think the new equipment will do, so that we have a proper estimate indeed of the impact. And then across the life of the loan, which is typically around 5 years, we indeed we monitor the actual consumption. We ask of the manufacturer to report in it on a quarterly basis. But since these are machines, the consumption is often relatively easy to measure. And via that, we can actually track whether the estimates that we set up at the very beginning of the investment actually result in the savings that we had hoped to achieve at the very beginning.
Mm-hmm. And if by any chance, I know that you are developing, the first projects, but if there is, some kind of gap between what you want to achieve or not, because this is one thing that you have in mind when setting, the process. What kind of correction measures do you have? So do you have, some kind of close look into the at the process, or supporting or helping to make this gap to disappear, to reduce? Could you please develop on that?
We can indeed provide support, especially as we have an annual more in-depth monitoring. Of course, it's also up to the extent that it's possible to reduce consumption even further. As in, we hope, of course, our estimates reflect reality in a decent way. If a machine or a type of equipment really doesn't produce the results that we want, we can indeed discuss with the manufacturer how to improve it even further, or what other steps or tweaks can be made. However, I think also the goal of our fund is to demonstrate basically what works and what doesn't. So at a certain point of time, we also have to be fair in if something doesn't work out as expected. However, something else that we can do, of course, but that's also depending on the specific project and the specific manufacturer, is provide follow-on financing if any other equipment or an additional part can be procured to result in further savings. But that's very dependent on the situation as well, whether that can work out.
One of the issues that we generally have in terms of equipment is the kind of energy that people use, and probably this is a difficulty, because not all Asian countries have some sources of renewable energies, or even in terms of the governments, they do not support at this stage this kind of renewable energies. So do you have, in terms of a plan or some kind of approach to this specific issue?
So if I understand your question correctly, if we have any approach to support renewable energy in specific?
Yes.
Okay, yeah. So it's I think it's a great question, actually. So a lot of the countries that we focus on, and especially with the within the processing stage, where, for example, there are huge dye baths being heated, the wet processing stage, basically. The countries that we focus on still have a very coal-based energy mix, which is of course very polluting. So any energy reduction there can be very impactful. In terms of whether we finance sustainable energy specifically, we can do it, but only as part of our of a full investment package. So, for example, with our first contracted deal, we did include a small part for financing of solar panels, for example.
Mm-hmm.
However, it is not our core focus, specifically because we see that subsidies or other initiatives that make it easier for manufacturers to take up renewable energy specifically are available. And the real differentiating thing for our financing is that it's not specifically energy related, but it's broader. It's energy, water, chemicals. So of course we support it to the extent that we can, but it's not our sole focus, so to say.
Okay, so but do you think that perhaps in terms of the future, the efficiency of the project is just a first step in terms of then going to renewable energies, because this is a huge thing in terms of climate change, for instance, and we know that as economic progress goes by, it always has an increase in terms of energy. So this is a question that we cannot forget. So I think that perhaps in the future you are going to look into that. Or what do you think, Christiaan? Do you think that in terms of the fund, there will be some possibilities on that, as you have said, about the solar panels, etc.?
Yeah, no, definitely, and I think indeed, as I already highlighted, we do have some flexibility there, luckily indeed, to support manufacturers, or at least give manufacturers the first push to also take up renewable energy measures within their facilities. And I think the good thing is that a lot of the manufacturers that we are in contact with are typically also the type of manufacturers that are already thinking a bit further into the future and are already quite sustainability focused, and are often very happy to have those conversations, even if we specifically don't provide the financing there. But at least to get the discussion going.
Okay. Do you mind to talk a little bit about the projects that you are, or perhaps one of the projects that you are working in at this moment?
Yeah, unfortunately I can't say too much about the project that we are currently working on. But I can discuss a bit about the project that we contracted earlier this year. So earlier this year, we financed Pratibha Syntax Limited, and I think it's a great example of the type of manufacturer that we like to do business with. Pratibha Syntax is an Indian based in India, Pithampur. It's already of decent size. It employs around 5,000 persons, and is really a front runner in all kinds of sustainability measures and initiatives. So it already even before we got engaged, they already engaged in initiatives with, for example, regenerative cotton farming. They were the first producer to produce cradle-to-cradle certified garments in India. And in the end, we have been able to provide them a long-term, so 5-year loan for around $5 million USD. And it was really for a wide range of equipment. So for spinning, and new spinning machines, new machines for the processing stage, and also a new water filtration system for their effluent treatment plants, which basically supports wastewater recycling. And interestingly enough, so the equipment that we financed wasn't specifically the most disruptive, very newest innovative technology, but it was just state of the art, really good, but yet already proven in the market. And that is still able to result in significant reductions across what we call the goods that we focus on: energy, water, and chemicals. And so we're eager to follow this and see where it goes.
In terms of the manufacturers, do you think that by taking these measures, are they happy, or are they, expecting that in terms of results, even in terms of their own activity, they will have a more competitive advantage towards other manufacturers? Do you think this is really happening? Do they have this in mind?
I think to a certain extent.
Mm-hmm.
And what I mean by that is that, of course, I think having a state-of-the-art production process which is as sustainable as possible is, of course, next to that, it's just good for the world. It's also a good marketing tool. And
Yes, that's right.
they see that, they understand that that brands, so their off-takers, also like this. So yes, I do think that the manufacturers that look forward to the future have to take sustainability into account. That being said, the difficulty there is that there's not much of a premium that they might get for their garments. So they invest in sustainability, but at the same time, it's difficult to really, for example, ask more for their products because it has been sustainably produced. So
Yes.
yes, I think manufacturers take into account, but it can unfortunately, only work to a certain extent.
So, because I'm very interested, and I suppose that people listening are also interested, because when we talk about sustainability, we have these three different aspects. You have the economic side, which is sometimes not very well. It is not spoken so much as the environmental side. And because there is this difference between the phase of investment and the current phase in terms of the operations, where you see the results of the investment. So you get the idea in terms of the payoff is not in terms of the short term, in terms of medium and long term. And this is interesting, because what I'm understanding from your explanation is that you are making loans, you are giving loans to people in terms of this investment phase. And then in terms of on a daily basis, people will have some kind of results in terms of medium and long term. But do you think that these medium and long term are more focused in terms of international markets or in terms of their own market? Because India is, it's a huge market, and it's one of the economies in the world that is really growing very fast, from the group of the BRICS. They are at the moment, really growing. So do you think that this is true, that they have this in mind, that in terms of the investment, they have some kind of advice from you in terms, of
The international perspective, basically.
Yes. Okay, I see.
So to answer your question, so a lot of these companies, they already operate internationally in the sense that they actually export a lot of the garments already. However, I think what we also see as a fund is that for us as an impact investor, especially as an international impact investor, we do a pretty thorough due diligence before we can provide any loans. However, I think so that takes a bit of time up front. However, the good thing is, and some manufacturers realize that, is that it can also act as a stamp of approval. basically that they have gone through a vetting process, both on the financial side as well on the ENS side. And it acts a bit as a stamp of approval for manufacturers, for hopefully for them to be able to access finance with other maybe local financiers as well, but also hopefully to brands, that it shows that they are a respectable party. So in that sense, yes, we do hope that the international aspect of having an international impact investor on board supports our manufacturers just in terms of reputation, basically.
Mm-hmm. And in terms of the of social terms, do you put in terms of the selection process, any kind of indicators that have some kind of relationship with the social aspects of sustainability?
Yeah, no, indeed, the social aspect is also key for us. The difficulty being is that our loan is not tied to any social indicators. It's really tied to the environmental impact. However, we definitely take the social and labor aspect into account when assessing a deal. We have a partnership with the Fairwear Foundation, which is a Dutch nonprofit working to improve labor circumstances in garment factories. And during the due diligence stage, we engage them. They have local teams to assess the situation at the manufacturers. And so they look at the overall working environment and, of course, do all necessary checks that, for example, that there is no forced labor, no child labor, so that those checks are in place. And they also specifically focus on, for example, awareness of workers' rights, whether that is communicated properly to the workers. And additionally, even though we don't provide specific financing for it, we also ask the manufacturers to update us on social KPIs, which is, for example, the amount of trainings that they can provide, or the amount of women in supervisory positions. And with that, we also, again, I think, stimulate the discussion with the manufacturer to improve on that side as well. And as our fund is still basically at the beginning phase, we are also still raising funds for technical assistance, which is basically a side pocket of money, not necessarily for investments, but for assistance to manufacturers. And that would specifically also perfectly tie into, for example, indeed, helping manufacturers with implementing improved social measures.
In terms of the loans, may I ask you if there is any kind of rate interest or involved, and how do you manage that specific?
Yeah. So our interest rates, they are set based on a risk assessment from our side. So basically, we look at the financials and we have a way to score basically risks and what interest rate we find appropriate. Interestingly enough, to the countries that we lend to, there's often a maximum cap involved with respect to the interest that you can charge, and that's often around 4.5 to 5%, which is really competitive and really quite attractive to manufacturers. What we also try to track is, for example, that with the savings on the equipment side, so the lesser energy, water, or chemicals used, we actually hope that they can offset the interest charge that we pay, so that on a net basis, they still come out positive. And well, it depends, of course, on the actual performance of the equipment that we finance. but that is also looking positive from the estimates that we have so far. So our interest rates in that sense should be very attractive to manufacturers.
But do you have any mechanism in terms of the contracts that you make? Because at this stage, the economic conjuncture is really in turmoil, and there are many uncertainties, namely in terms of political issues and others that we cannot control. And so in terms of the Western world, when we have this kind of turbulence, as you know, what we do is to have in the contract some clauses, some conditions that are, spoken before ahead, in order to defend the contract and to make, the contract a win-win situation. Do you have this kind of clauses in these contracts? Is it previewed?
Yeah, no, definitely. So these contracts are thoroughly discussed also together with the manufacturers to get to something that we both can work with. And what is typical for our contracts is that they include the commitments that the companies make on the ENS side. So, for example, if there are any gaps resulting from our environmental or social due diligence upfront, we include an action plan for them to address these points during the lifetime of the loan. Mm-hmm. And this is also included as part of the loan documentation. And other than that, it's I think a very typical loan clauses that we include. We don't include anything that's too restrictive from their side.
Mm-hmm. In terms of your background, you have already been in different in a different investment environment that didn't care so much in terms of sustainability, but had a more hard financial approach. And in terms of your experience, of your opinion, I would like to know, what do you think that could be made in terms of making the financial system, particularly in Western countries, more sustainably friendly? Because what we find out is that we have, for instance, in the European Union, some kind of investors like business angels or venture capital organizations that are more devoted to innovation. But at this stage, innovation is not always connected with sustainability indicators. And in terms of the innovation system, for me, this is a big concern, because when we are in a period like we are at this point of transition into a green economy, into a more sustainable model, the finance aspect is very, very, very important. So in terms of your opinion, what should be made, or what could be made in terms of getting more funding, not even in terms of this particular project that you are in, but for the financial system as a whole?
Yeah, that's a great question and a very challenging one, of course. I think indeed investors should move away from only a exclusion list or a checklist approach. I think for a lot of investors, ESG is still basically don't invest in tobacco, don't invest in oil and gas. I think to really make the next step, investors on a broader scale also should really reward basically good practices specifically. So not only excluding bad practices, but actively reward good practices. Of course, this is way easier said than done. I think part of the solution could be more transparency across the whole value chain of the actual impact on the world. And I think textiles is a great example of that, because even though the textile sector does come into the publicity spotlight now and then, sometimes more for the social side, and sometimes also for the environmental side, I think basically transparency of the amount of water, energy, and chemicals also that are being used just for the production of clothes, even though that you see that well, people now tend to buy clothes more often, and with the whole fast fashion trend, um, it it is basically going the wrong way. And I think rewarding good practices, so for example, rewarding manufacturers who really try their best to produce as sustainably as possible, that's, I think, something we should work towards. But that really requires cooperation indeed, well, in the textile industry, also from the brands, but the brands indeed have their own stakeholders, which can be big investors, which also just really need to realize that there's more besides financial profits.
Mm-hmm. And do you think that innovation could have a role on that? Because what I have came across in terms of some projects is that even in terms of sustainability, you know, it's not a kind of deterministic approach that sustainability has to be more expensive than doing things in an unsustainable way. So I think there is a lack, perhaps, of information in the financial business. We always tend to look at the numbers because, you know, they are easier and more objective to look at. But at the same time, in terms of sustainability, we don't have these kind of indicators. I don't know if you think that in terms of, you know, in terms of the political side, there could be also something to be made in terms of the finance system that could help, you know, people to look at this part of the system and these indicators, or if there is a lack of indicators. I don't know. What is your opinion in terms of you know, this support? Because we have the Green Deal, but at the same time we have to have all the instruments put in place in terms of making it possible. So and the burden cannot be, you know, all in the back of companies or in terms of the, you know, of the customers, so to say.
No, I fully agree, and I also tend to agree that transparent reporting on the environmental impact per company, but also per investor, to make it basically easier to track what you're actually investing in, can be an important or should be an important next step. And I believe there are already multiple initiatives ongoing to get this going. However, of course, to move this in the broader financial sector, that probably will take some time. But I fully agree with you that reporting, because as you mentioned, indeed, numbers are the easiest to look at. Transparent reporting on the environmental impact can solve that, just so that the perception changes. Another thing I wanted to address, because indeed I heard you say, I think this is a very consistent perception, that investing in sustainability per definition is more expensive, or is not financially attractive.
Yes.
And that's also not always the case. of course, it really depends, I think, on what specifically you want to finance. There are probably more challenging business cases, but there's also some that can be relatively simple. And I think in a lot of cases, indeed, where you look at newer equipment, it can actually go hand in hand, sustainability and financial performance. And so I think that's also a perception that needs to change over time.
Yes, because perhaps one of the things that sometimes people don't realize is that without having any touch in terms of the margin that they are getting, the price that they are getting, the margin could be higher. And in terms of the trend, at least in Western countries, is that you don't have a higher turnover in fashion in many segments, but you have a higher margin, so you get more because you are reducing specifically energy and water and other resources that are involved in terms of the production and in terms of the commercial side, in terms of the distribution side. So this is an impact, and I think that people now, the people that are investing, companies that are investing, are also looking at that. And Christiaan, I would like to know, and people would be eager to know also, in terms of how much money do you have specifically at this stage, and what are going to be what are your projects in terms of having more funding for sustainability in the years ahead?
Yeah, so our fund is a relatively new initiative. We currently have around 20 million under management. So in the broader scope of the whole textile industry, that's only a drop in the total bucket, of course. We are still fundraising, hoping to get to 60 million in total. And even that, of course, won't change the whole industry. But aside from our impact objectives at the manufacturer level, we really see this fund as a demonstration, basically. This fund is not going to change the whole sector, but hopefully we can engage enough other players in the sectors, which are manufacturers, can be technology providers, and of course brands, to show that providing financing for equipment in the textile sector can be done profitably whilst having a huge impact on the sustainability. So that are our plans for the coming few years, to basically expand our fund, and with that expansion also engage and keep engaging the broader sector.
Mm-hmm. And do you have any plans to involve more people from the financial side, from the financial sector?
Yes, we would definitely love to. Of course, that those can be both investors in a fund, but also on the more locally, for example, the domestic potential financiers. And I think also there, what we really hope that we can also mobilize more local finance, especially the long-term finance that we are currently providing, to show that the risk perception is skewed. Of course, it's a difficult market to be in. However, it might not be as risky as some other domestic financiers might view it to be.
Mm-hmm. Okay, and there is something in terms of the type of investors that you have in the fund. And I would like to ask you, what is the blend of the investors that you have, and what is their role in terms of the participation of the fund?
Yeah, so currently we have three investors, which are the Lourdes Foundation, formerly the CNA Foundation, Mills Fabrica, an innovation platform based in Hong Kong, and the Rabobank, which is a Dutch commercial bank. And how our fund is set up is that we have a blended finance structure. So basically, Lourdes and Mills Fabrica have provided a grant, basically, which takes up the biggest part of the potential risk that we might run as a fund. And the Rabobank has provided commercial capital, so just commercial debt. And the good way of, or the good thing about running a blended finance fund is that aside from only impact investors like Lourdes, like the Mills, we can also mobilize commercial money to to support and to channel this money basically into sustainable initiatives.
Okay. That's fine. I have here one question, but I think that it has already been answered. A question about in terms of the future, if you consider to have funding of producers in Central and Eastern Europe. You have mentioned in the beginning of our conversation that you have made this selection. You looked at the countries where there could be more impact, but at the same time, I think this is a question that perhaps you could add something to it.
No, so indeed, so our current focus, especially for our first investments, are those three key countries that we mentioned at the very beginning. So India, Bangladesh, and Vietnam. As an investment fund, you often work with an investment mandate. So basically, it shows what you can and cannot do. We do have a bit of flexibility, basically, in also investing in other countries. However, that's more relevant once the fund has been established a bit more. So there is a bit of flexibility there, but it's not our core focus.
Okay. So I would like to ask you just one final question, because you are basically providing equipment for textile manufacturers in Asia, but and I suppose that these manufacturers are based in Europe. I don't know if they are based in Europe or in other countries. And one of the things that goes along with this kind of technology is that we have a kind of learning curve, because what we have seen in terms of globalization is that when we start to produce in other countries like China or Vietnam or Bangladesh, as people are more qualified, so as the population gets more qualified, they have the opportunity not only to appropriate the knowledge and in some way the model in terms of the technology, but also to get to the next step. So we saw that in terms of IT, and IT is very much connected with the fashion business, and we could see that, or in some specific terms, in terms of biotechnology and biotechnology, some applications of biotechnology in textiles, in production specifically. what do you think about this? What are your views in terms of having first, what are the manufacturers, and how do you look at the possibility of having manufacturers in Asia and in other countries that would get funding from your fund, from Good Fashion Fund, because this is also important in terms of the development. I tend to be optimistic and see the world as a whole, and see more opportunities of growth if people are more developed all over the world than to see competition between countries and between especially between countries and regions. So what can you tell us about this?
Yeah, no, that's another great question. I think a lot of the investment plans that we look at, it kind of differs per project. So I think we see a majority indeed of more international manufacturers, based in Europe, some in the USA. We also see quite a lot of Indian manufacturers, which makes sense because the textile sector there is so enormous that local knowledge has already popped up, and local manufacturer or local equipment providers, I should say, are already in place. And of course, there is a natural flow of knowledge, I think, if you implement international, or if you implement equipment produced by, for example, European providers in India, Bangladesh. Of course, there's a natural flow of knowledge of how it works, how it fits in the production process. So hopefully that's and I actually really quite like a suggestion of thinking of how you can disseminate that knowledge even further locally, because I agree that in an ideal world, the equipment would all come from domestic providers as well. That is not yet the case, but I actually really quite like the suggestion of thinking how you can facilitate that transfer of knowledge even more, also from an investor's perspective.
Okay. Well, thank you so much, Christiaan, for this very clear and really brilliant explanation of the investment in terms of sustainability projects. I think this is really a concern for this period, and so probably we will have more discussions about this subject in the future. But I do thank you and for your contribution, and I wish you could stay with us and enjoy the rest of the conference. Thank you so much. Thank you.
It was a pleasure to be here, and thank you for hosting me, Isabel.
Thank you so much, Christiaan.